because this is now decision time. Are you going to take your profit bottom of the range, or do you feel that this is going to go for another leg towards the downside? This is him sort of thinking, right, ready to sell, ready to try and sell this through 07.5. So first up, because you're very balanced, there's your 07.5. Any reason for the market to fall down the range is good to go. There's nothing that's driving this to the upside. So anything that gives it a chance to go down, you can go for, which is what he's done. He's already going to have straightforward targets, 07.5, 066 on it. And this is the reason for the 066. It was the previous highs before the data. It was previous daily highs from the day before as well. So that's this target zone down here. So you've got that very clearly decided. Once you get down to 07.5, decision time. What's the market going to do here? Once it then hits through that level, adds to the trade. But what was really key was this bit here. This is what effectively makes it a scalp. The willingness to just go, right, we're at the point where my target is, unless this gives me a straight line move, in which case he's going to be looking down here. So 05.5, even back all the way to the scene of crime, then he's out of the trade. And that's the way he's going to try and approach this. So it's a straightforward, what I call level to level scalp on this one. This is a 1 minute chart. This is a 15-minute chart. And so this is the move that he's playing. That bit is the bit that we just saw. This is the context. When he takes the trade on, you're trading up here within the green candle and then looking to play this rotation back down. So straightforward, slow burn, point to point scalp. Next up, what we're going to go and have a look at is what I call a slow burning trade. Now, from that initial chart, you saw that situation where we were sitting at the top of the range and we've then moved down. Any kind of range moves are always helped if you get a slight catalyst. Now, this was a catalyst that was very, very slight. So I'll show you this so slow, in fact, that I'm actually going to speed this up a little bit so that this doesn't take too long. The idea behind this trade is there has been a comment from Williams, from the Fed member, and essentially he's not really said anything overly committal here, but what he's not done is given reason to believe that we may see more rate cuts faster. That's what the market's interested in. So being aware of what's important to the market absolutely is key. But in this situation, effectively, the trade here is we're at a place where you're sitting at the top of the range. There's a chance for this to roll down the range. When he comes out, and particularly this line, monetary policy can be moved towards a more neutral stance depending on data. That suggests they're not ready to do anything, and perhaps the data's not there enough to justify rate cuts or many rate cuts. So that's the reason for the short in 2-year treasuries. Now, this is the reasonably slow burning trade. You can see again where his mouse goes, the green, effectively showing where his stop is. So in his head, he's mentally thinking, so 0.93 is approximately where his stop's going to be. He's also then got levels marked out below to target. So 0.75, 0.67, 0.66 are the two areas that he's looking for. We've seen an add-on because the market's had that little push towards the downside. I'll slow this down slightly for you. So we've had a quick add-on. And one of the things as well with scalping, if you start to tick in a certain direction, you're being shown information. You're being shown that, well, you're probably right on this idea. So add on to the trade. So he's added another 25. And now this is where I say you have to remember what your targets are. Your targets on this trade, 07.5, which is the initial bottom of a little range, and then 06 or 066, 067 is the low or a daily significant daily low. In fact, I think it was still the low today. It was the low today when I came in here in 2 years. So it's where we'd rolled down to, and once again we've held that level. So it's the same area we've been holding since payrolls. So that then becomes the target. So what you're seeing now is that this is the bit where, I think a lot of people think, well, that's not scalping. The people have this view that scalping is sort of super high energy. He's going to be in, he's going to be out, he's going to be long, he's going to be short. No, this is just a dead simple, straightforward, slow burning scalp, as I would call it. Trying to play this one towards the downside. You get down to 07 halves. What or what will be interesting for you guys here, is the approach once you get to the bottom of that range, because this is now decision time. Are you going to take your profit bottom of the range, or do you feel that this is going to go for another leg towards the downside? So he's got his position on here, and you already saw the mouse go down above or just hover over 0.7 What's going on there then is this is him sort of thinking, right, ready to sell, ready to try and sell this through 0.7 down here. So watch out when it comes down here. Also watch the size of his position. So currently 75 lots short. Scales on out because the fact that we've then just ticked up away from the low. So scaled a little bit of that position out, reducing the size slightly. But you still see he's looking then. And again, this is really important. Just because you've covered something and you've got out, don't talk yourself out of selling more if the conditions are right. What he's looking for here is he's looking for the market to hit through that 7.5. So you're looking for the last traded quantity, a bigger size, hit through that 7.5. We've just seen it back to 75 lots short. So now what he's doing is, yes, he's moving his average price lower, but that information that they've now taken out the 7.5s is the information to say add more. And he does. He adds another 25. So we're now 100 short on this. So this, like I say, it's just your straightforward playing it down the range scalp, down the range scalp. He knows where the next level is that he's looking for. He knows what he's trying to play for on this trade, and it's to get down here to this 0.67, 0.66 zone. That's the plan on the trade. The thing with a scalp, as I said before, it's about just being straightforward. It's recognizing this opportunity to roll down the range, but also then being clean in your execution. And what I mean by that is when you get to the point where a decision is to be made, there's a process that goes, okay, first up, if it gets to 0.67, 0.66, what am I going to do? Am I going to cover anything? And he's already going to have this in his head. He's already going to know exactly what he's going to do when we get down here. Stop. Yeah, he's going to be back above this 0.7 zone. That's where his stop's going to be placed on this one. So you back that, you're down into this zone now. So we've reached the area of support that he was looking for. And you see now the sort of mental stop now is much, much tighter. Got down there. If it didn't go straight through, cover. So he's reduced half of his position here. This is now a trade where effectively he's doing what I call giving it a chance. Very happy to be out here. But the fact, out 0.66. The fact that it's pushed on that little bit further, this is where he's willing to sort of step back and go, okay, let's give the last 50 a chance. Perhaps there's a further level beyond this. But you see already the tolerance for staying in is going down. Effectively, with the cursor hovering here, he's no longer looking at a stop up here. This is effectively a kind of stop in the sense of if this doesn't go, he's going to give this one up. It's exactly where he wanted it to go to anyway. So you're giving it the chance. There we go. You see bids 25 to try and get out, got out of the other 25, job is done. That's really important with scalping, to just be clean with what you're doing. If there's a reason to look for 0.66, 0.67, well, when you get there, get out of the trade.